Time for your weekend special shows, and you're watching Companynama. To give you all the corporate and startup highlights of this week, I'm Sresha Tiwari. Over to the corporate world updates first. The promoters of the Adani Group, led by Gautam Adani, plan to continue reducing their holdings in group companies to build a liquidity buffer that can be used to tap new opportunities and invest in other business units. In this regard, the board of Adani Green gave approval to raise up to 12,300 crore rupees through QIP route. The group has already sold stakes to GQG partners and are in negotiations with other global investors for potential divestments. Talks with a West Asia-based fund are expected to be finalized by September. IndusInd International Holdings Limited, the promoter of IndusInd Bank, has said that its board approved raising up to $1.5 billion to increase its shareholding in the lender to 26% from the current 15% and fund Reliance Capital acquisition. The first objective of the capital raising is to increase its promoter shareholding in IndusInd Bank from the current 15% to the proposed 26%. In terms of RBI guidelines, the promoters of IndusInd Bank are eligible to increase their shareholding from the current level of 15 to 26%. Accordingly, IIHL will raise capital in a phased manner to mobilize the required funds for infusion. The board of IDFC First Bank has approved the merger of IDFC Limited and IDFC Financial Holding Company with itself through a scheme of amalgamation. This is the second major merger deal in the financial space after HDFC Bank and Housing Development Finance Corporation. Under the proposed merger, shareholders of IDFC will get 155 shares of IDFC First Bank for every 100 shares held in the former. The merger is subject to approvals from the Reserve Bank of India, SEBI and Competition Commission of India, and also the National Company Law Tribunal, the stock exchanges and all other statutory and regulatory authorities besides the shareholders of both the listed firms. IDFC Limited holds about 40% stake in IDFC First Bank through IDFC Financial Holding. IDFC Limited is 100% held by the public. Air India and Vistara have told the Competition Commission of India that there will be no adverse impact on competition due to their merger, as rivals are present on most routes that the combined entity will fly on. Tata Group is merging Vistara into Air India to create a single full-service airline, with Singapore Airlines owning a 25.1% share in the new entity, while AirAsia India is completing a merger with the Air India Express to create a single low-cost subsidiary of Air India. The CCI's scrutiny will not have any material business impact, although it could have an effect on the timeline, they have said. Samvardhana Motherson International on Tuesday said that it would purchase an 81% stake in Honda Motors component maker subsidiary Yachiyo Industry for 1,059 crore rupees. The Noida-based auto parts maker said that it is expecting this deal to close by the first quarter of 2024-25. Yachiyo manufactures sunroof systems, fuel tanks, as well as exterior resin parts like bumpers and rear side windows for pickup trucks. This is Samvardhana Motherson's second global acquisition of 2023. In February, it announced it was buying SAS Auto System at Technique GmbH, which manufactures auto cockpit modules from French company Faurecia for 4,790 crore rupees. Shares of Samvardhana Motherson International rallied 8% to hit a 52-week high of 92.25 rupees on BSE in Wednesday's intraday trade. After the company signed the pact, the stock surpassed its previous high of 91.68 rupees, touching on July 21st. Tobacco to hospitality conglomerate ITC is looking at finalizing the long-standing proposal for demerging its hotel businesses, which it had shelved during the pandemic. As per sources, process for the demerger of hotel business is underway. It will explore alternative structures in line with the industry dynamics. Further, it's being said that a separate listing of the hotel division is being considered. Earlier, ITC chairman and managing director Sanjeev Puri had said that the demerger of the hotel business is very much on the table, and due to this development, the stock of ITC had touched a record high of 480.65 as the stock has gained 40% this year and more than 60% in 1 year. But brokers believe that the stock can show an upside of about 30% from the current level. Jefferies has given a target of 620 rupees on this stock in the bull case, which is about 30% above the closing of 475 rupees on July 5th. Reliance Jio Infocom is set to sign a $1.7 billion deal with Nokia this week to purchase 5G network equipment. This follows the $2.1 billion worth of equipment ordered by the Indian telecom operator from Ericsson in its attempt to roll out 5G across India this year. The company has already purchased 5G spectrum and plans to invest $25 billion in 5G infrastructure, making this a standalone mode, the sole holder of 700 MHz band in the country. And moving on, while we talk about corporates, there were some giants that were surrounded by controversies and on the radar this week. Let's take a look. Byju's CEO Byju Ravindran told shareholders that the firm will form a board advisory committee to provide advice and guidance to CEO on matters pertaining to the composition of the board and the governance structure. The committee will serve as a working group consisting of independent directors with credible backgrounds and relevant experience from diverse corporate fields. It aims to hold another EGM in 3 weeks on the composition of the board. During the EGM, the shareholders reportedly wanted Ravindran out and appoint an interim CEO in his place. In other news, Byju Ravindran, Divya Gokulnath and Riju Ravindran have sold shares worth $408.53 million in 40 secondary transactions since 2015. The promoter shareholding in the company has dipped from 71.6% to 21.2% since 2015-16, according to an analysis by Private Circle Research, a market intelligence platform. Also, Shah Rukh Khan may not extend his relationship with Byju's. Days after TCS sacked 6 employees in a recruitment bribery case, Tata Steel has now fired a total of 35 people for breaching the code of conduct. Out of its 38 employees, 35 were suspended for unacceptable practices bordering on ethical issues and the other 3 for sexual misconduct. The company took action against its employees based on complaints received by several whistleblowers on issues such as misuse of authority, conflict of interest and contract management agreements. Tata Steel received a total of 875 complaints last fiscal year. 158 were related to whistleblowers, 48 were regarding safety and 669 were on HR and other behavioral issues. SEBI has issued a show-cause notice to the National Stock Exchange in allegations saying that certain traders manipulated its software to execute many orders undetected and displace other users from the system. Trading access point software scandal was detected in 2013, but the authorities caught up with it during an investigation into the co-location scam by the Income Tax Authority, where former NSE chief executives Chitra Ramakrishna and Ravi Narayan are among the accused. And in some relief for gofirst, the Singapore Arbitration Court has ordered Pratt & Whitney to supply 5 engines per month till December to the airline. This is expected to come as a relief for gofirst. Reacting to the decision, Pratt & Whitney said that it respects the decision and will comply with the order. Meanwhile, gofirst will challenge the Delhi High Court's ruling permitting its lessors to inspect the aircrafts, as there are inconsistencies with the order passed by the National Company Law Tribunal in the case. The Grounded Airlines Resolution Professional has said this, and the court has asked DGCA and the airport authorities to allow the lessors or their representatives to carry out inspection of their planes within 3 days from July 5th. The court allowed the lessors to inspect them and maintain its engines of all 30 aircrafts at least twice a month until final disposal of the writ petitions. The world's largest internet company, Google, has made a big allegation on the Competition Commission of India. It has alleged that CCI has asked Google to change the business model only to benefit Amazon. In October last year, CCI imposed a fine of 1,338 crore rupees on Google and also asked Google to make 10 major changes in its App Store on Android. Google is accused of abusing its dominant position on Android. CCI had fined Google after finding it guilty. Google has filed a petition in the Supreme Court against the CCI order, and in the same petition, Google has also said that CCI has given a notice on behalf of Amazon in this matter. relying on unreliable information. A judgment has been passed against the company, is what they've said. June has come to a close, signaling the end of the first half of 2023. However, the funding winter that has gripped Indian startups since last year continues, with new age tech companies securing only $5.5 billion across 549 rounds in the first 6 months of the year. The funding landscape for startups witnessed a 72% drop compared to the previous year. In H1 2022, $19.5 billion was raised across 1,576 funding rounds, and in comparison to the second half of 2022, when the funding winter took hold, investments have further declined by 23%. PharmEasy, a company related to online pharmacy business, plans to raise 2,400 crore rupees through a rights issue. The company has informed the board and investors about this plan, and according to a report, PharmEasy's parent company API Holdings plans to issue new shares at 5 rupees per share, while in 2021 the company raised capital at 50 rupees per share. That is, compared to 2021, a plan has been prepared to issue shares at 90% discount. According to this report, the valuation of PharmEasy can be $500 to $600 million, which was $5.6 billion 2 years ago. The amount raised from the rights issue will be used to repay the loan taken from Goldman Sachs. And with that, it's a wrap on Companynama this week. We'll be back next weekend, but to get your daily corporate updates, watch Corporate Central, Monday to Friday, Money9's daily dose of corporates and markets for you. You have a safe weekend, and don't forget to watch Money9.